to open up this debate.
Hi, can I be seen and heard? Great, thank you. I prefer verbal POI, so please unmute and ask. Thank you. Before the rise of cryptocurrencies, businesses transacted using dangerously volatile domestic currencies. Think the Vietnamese dong or the Thai baht. When the rise in the use of cryptocurrencies in these transactions came in the 2010s, it provided stability to an otherwise far worse alternative for millions in developing nations. We need stability, not volatility. We are very proud to propose. What are cryptocurrencies? These are digital currencies where transactions are verified and tracked by a decentralized system. Financial transactions usually take the form of loans or purchasing products from overseas. To be clear, the trading of or investment using crypto, which is done using domestic currency, are not financial transactions and don't fall within this debate. There are many different types of cryptocurrencies. Some are mainly for this speculation and investment, such as Solana and Dogecoin. In this debate, however, we're talking about the cryptocurrencies that have been used for financial transactions. These are largely more stable, like Tether, because businesses are averse to taking risks on these financial transactions. Crucially, stable coins adopt two mechanisms in order to maintain stable prices. First, they are often backed with high-value stable assets. This means for every cryptocurrency in circulation, it is backed by, for instance, gold or currency reserves. Second, algorithms are often employed to ensure that the demand and supply for that cryptocurrency is maintained at a stable level, stabilizing the price. Crucially, on our side, the rise of cryptocurrencies means that the two mechanisms I just explained will be strengthened in the future because their use in financial transactions specifically creates demand from users to increase stability. Therefore, in order to attract more users to their platforms, firms have the active incentive to strengthen these mechanisms to increase stability. What is our stance? We support the rise in the use of cryptocurrencies in financial transactions. Second, we think the comparative they have to defend would have been businesses and people continuing to adopt domestic currencies. We think these domestic currencies are likely to be weak because if domestic currencies were strong, there would have been no need to switch to using cryptocurrencies in the first place. That is why the majority of crypto transactions we're talking about in this debate occur in the developing world. More on that in the arguments. Two arguments in this speech. First, developing nations need alternative currencies. And second, cryptocurrencies are those alternatives. First, developing nations lack alternatives. The premise of this argument is that for decades, developing nations have been caught in a pincer. Either they use domestic currencies of their own, or they use the currency of a global or regional power, like the USD or Euro. Unfortunately, the first option is terrible for developing nations because many developing nations have incredibly volatile currencies. The limited amount of foreign exchange reserves they hold in their central banks constrains their ability to maintain stable exchange rates in response to international shocks. This volatility drastically impacts people and businesses on the ground in three structural ways. First, it creates high transaction costs for trade. When currency brokers know that developing world currencies fluctuate, holding these currencies becomes more risky for them, forcing them to charge greater bid-ask spreads to hedge against that risk. I know transaction costs sound general, but when every imported item in a local mart costs 2 to 3% more, it means vast swaths of poor families that often live on less than $10 a day are even more squeezed financially than they already are. Second, it limits access to credit. Banks don't just create money to loan out. They need to receive their capital from somewhere. And the problem with banks in developing nations is that they receive fewer savings because the population is generally poorer, limiting their ability to readily loan out capital. This means that local businesses that desperately need loans to set up a new factory, for instance, simply don't have the means to do so. 3, volatility often creates a vicious cycle that spirals into hyperinflation. The reason price shocks often occur without any forewarning is because fear spreads. When the value of a currency dips, everyone in the market wants to sell it to minimize losses as well, causing the currency to plummet in value. This looks like what happened in Argentina and Sri Lanka, who are in the throes of a currency crisis as we speak that has just wiped out the savings of their populations overnight. Unfortunately, the alternative of using a foreign currency is often equally unpalatable because they lose all monetary independence. When you cannot control as a country how strong or weak your currency is, the competitiveness of your exports, the affordability of your imports, and the ability for you to attract foreign investors is completely dependent on the monetary policy of the US Fed or the European Central Bank. This had devastating consequences in Zimbabwe, who was forced to adopt the USD after hyperinflation exceeded 1 trillion%, yet their economy was crippled after they dollarized because the USD was far too strong for them, crippling their cotton exports and slashing the incomes of millions of farmers. The upshot of this argument is that developing nations are caught between a rock and a hard place. Their domestic currencies are too volatile, and foreign currencies enslave them to a foreign government. Without cryptocurrencies, opposition is a viable alternative for these nations. Before I move on, I'll take that.
Does the average Zimbabwean have access to cryptocurrency?
Yes, we think so, because internet penetration is rising all across Africa. Second argument, cryptocurrencies are the alternatives these nations need. Premise, crypto is a uniquely empowering alternative for developing nations for 3 structural reasons. First, because of its higher liquidity. With the widespread adoption of stable cryptocurrencies for financial transactions, the sheer volume of transactions, platforms supporting these transactions across the world mean that liquidity is maximized. Higher liquidity means there's less risk associated with holding that currency because it can easily be bought or sold, lowering transaction costs for the vulnerable who use these cryptocurrencies. Second, there's greater access to credit. Instead of being restricted to domestic banking systems, using cryptocurrencies allows one to tap into international financial networks. For example, Ether is used as a currency on the Ethereum network, allowing those who own Ether to access international financial services. This looks like a greater supply of competitive loans because service providers operate internationally even in developed economies and thus have more money to distribute. They often offer lower interest rates too, since different providers compete to attract cost consumers. Note, they may claim that such financial services can still exist, but the difference lies in the quantity and quality of such services. Those living in the developing world can only access fintech services based in the developed world through worldwide blockchain networks. 3, these currencies are decentralized and independent. Instead of being heavily influenced by one country's monetary policy, cryptocurrencies operate using blockchain, where no one entity controls and validates transactions. Moreover, any fluctuations in the different economic situations of individual countries is reduced since its worldwide adoption guarantees diversification that lowers risk. The upshot is that cryptocurrencies bypass the structural deficiencies of both local and superpower currencies for developing nations, empowering business and people in developing nations to uniquely access stability and credit. This is why they rose in popularity in Vietnam and Thailand, where cryptocurrency adoption has just increased 8-fold last year. I know what Op will say, Terra just crashed. Yes, but it crashed because of mismanagement. While other cryptocurrencies significantly reduced interest rates, Terra just increased it during a recession. Therefore, we think that Terra is an isolated example and the vast majority of cryptocurrencies are incredibly stable. Our case is simple. We need stability, not volatility. We are very proud to propose.
I thank the first proposition speaker, invite First Stop to open up their side of the debate.
Am I audible?
Yes.
Cool. Even the so-called most stable currency of Bitcoin was thought to reach $100,000 at one point, but now it stands at barely above 20. That is the best example for proposition. They try and get rid of the example of Terra. There are numerous cryptocurrencies which continue to crash each and every day. And what that looks like is billions of dollars being stripped away from the average person who's tricked into investing. People who have been presented with a mirage of hope of easy money and instead have lost their life savings and been unable to pay their rent each and every day. That is what this debate is about. That is what this opposition needs to engage with. If proposition cares about stability, it is them who lose this debate. They cannot model out. Three things I'm going to do in this speech. The first thing I'm going to do is a bit of rebuttal. Secondly, why cryptocurrency is uniquely a harmful currency to conduct financial transactions. And finally, why cryptocurrency has no accountability that leads to dangerous paths. Firstly, on rebuttal, they have three main claims. Their first line of attack is to say that firms will make this currency stable, but people will buy in. Two responses. The first thing to say is that this relies on people being able to interpret lots of things about cryptocurrency, which is generally untrue because it requires a high bar of information, which necessarily means that companies have vastly more information and have the capacity to. But the second thing to note, and POIs in chat, by the way, is that we would say is that it's just simply much easier to spread misinformation, or it's much easier to send out a tweet if you're Elon Musk, because those are the real people who actually control cryptocurrency. They say they have no management whatsoever. We say it is actually the elite, the people with the most money that are able to control the prices, and that is why it's actually so harmful. Their second line of attack is here to say that cryptocurrency is only used in the developing world. We reject this on faith. We think that cryptocurrency is used all around the world, and that is what this opposition has to defend. Lots of people have it, and lots of people constantly lose money for all the reasons that we're going to tell you in this speech. The second thing that they say here is that the USD is particularly bad. I would note firstly that the USD tends to be particularly constant because there's high amounts of global demand because it's used as the global currency in terms of global trade. But the second thing to note is that where it fluctuates with all other currencies, which is to say that where the USD dips because there's a global crisis, everyone else is affected by that, which means that the USD is actually a particularly good currency in many of those cases because it appropriates itself to the other currencies that exist. Because when a crisis happens, everyone is affected by it, and therefore it functions relatively well. The final thing that they say is that Terra was crashed because of mismanagement. We would note that mismanagement is probably something that happens to other like cryptocurrencies as well, and that is not a solo incident. We will point to the fact that everyone said Luna was going to the moon, but only to it to crash, and actually people lost huge amounts of money. With out of the mind, the vast bulk of the material is out of this debate. The rest of the material will be integrated into substantive. Firstly, why do we think that cryptocurrency uniquely is a harmful currency to conduct financial transactions? And this will explain both why people are likely to make poor decisions, specifically in terms of cryptocurrency. And even if they don't, cryptocurrency is specifically volatile, which means that many of these transactions are likely to be harmful. Note that this takes down the vast bulk of their material because they cannot claim that this is a good currency if you are not trading its real value, and if in fact people are losing money from it, and therefore we should not use it. The first thing to note is people are likely to make uniquely poor decisions when they buy crypto, which this opposition has to defend because they have to defend trading it as well. Why is that? Firstly, because you require immense amounts of information to understand it because it's entirely based on demand, meaning that it's likely to have things like speculative bubbles. Note that this is different to companies which somewhat have stable value, which are unlikely to crash the next day. And the reason for that is because even in this opposition best case, where they assume that like investing or using other forms of currency crashes, we will note that perhaps companies and governments have the ability to lift that up through things like central banking reserves, and they're able to do so by backing it and ensuring that it is relatively stable. But secondly, because it means that those with the biggest stake in crypto often have the most incentive to spread misinformation because they want to create huge spikes such that they're able to sell at the top and then watch it crash after, which necessarily means that in many cases, that's why Elon Musk tweets and the value of Dogecoin doubles. And that is exactly why this is so unstable and people are likely to not use this particularly well. The third thing to note is that we think that media promotes success stories. You never see the failure of someone in crypto. It promotes the idea that you can get money quickly, and that necessarily means that often people are misled. The final thing to say here is that often crypto is susceptible to things like insider trading far more, which is to say that it's quite easy to see if someone invests into a whole bunch of like shares without any reason. But given that crypto has no like basis on what to invest in, we'd say that it's much harder to catch that. There's no way for this opposition to regulate it. The final thing to note here is that we think that people simply have an optimism bias, which necessarily means that they think that they'll get lucky, that they'll invest at the right time. And that necessarily means when people buy crypto, in order to do the transactions opposition wants, they are likely to harm themselves. The end of that is just to say that the vast majority of people are not able to do successful transactions with crypto. Instead, they are losing money to the false hope of making easy money. So the second part of this argument is to say that even if people make decisions at one point in time, cryptocurrency is inherently unstable, and this flips the vast bulk of the material. The first thing to say is that there's no way to control the currency with a body because there is no regulation, which is to say that under our side, we're able to do things like governments buying and selling government bonds in order to control the in order to control the supply of that currency, meaning that necessarily we're able to hold it somewhat stable. Whereas what this opposition has to defend is basically the rich people, the ultra rich who hold the most cryptocurrency, buying and selling at their own will and controlling the average person's access to that currency and therefore its value. The second thing to say is that it has no inherent value. We will note that other forms of investment or other forms of currency are more likely to be sustainable because they have constant demand and they have reason for that demand, i.e. the reason why people constantly, why the USD is constantly stable tends to be because people constantly buy their exports, whereas the price of Ethereum is just totally based on how people wake up the next day, whether they feel like they should sell or buy. The final thing to say here is that we think that the people is that even if opposition can say that some cryptocurrency is somewhat stable, that i.e. they might want to talk about Bitcoin, we would reject that for the reason that Bitcoin is halved. But we would also note that people who buy Bitcoin are more likely to buy other crypto in the future, which necessarily is because they think that it's easy profit at the point where they've got one cryptocurrency. They don't realize that many other cryptocurrencies are unstable. So even if this opposition wants to say there are a few cryptocurrencies which are good, note that they must defend people buying other cryptocurrencies which are not stable, which often leads to people losing money and leads to them falling into the vast grips of manipulation that mean that they're unlikely to do things or that they're less likely to have money in the future that they can actually access. The final thing I'm going to talk about in this speech is why cryptocurrency has a lack of accountability, and that is necessarily worse. But before that, I'll take a point.
So we explained why retail trading in crypto is not a financial transaction in crypto because it's conducted in another currency. Can you explain why your case is relevant?
So I've explained in this speech that in order to have the financial transaction in crypto, you must necessarily buy the crypto first, which therefore itself is an investment. And that necessarily means that at the point where you bought it, you lose out in the future for all the reasons I've given. This is relevant. You do need to deal with it. So finally, why cryptocurrency has no accountability? And the thesis of this argument is to say that it's uniquely unaccountable because it's anonymized. There is no central authority that exists. It's easy to hide your identity in these transactions. And that's structurally true because you could purchase them anonymously. What that means is that it's used for things like illegal drug trade that makes people addicted to drugs all across the world. What that means is that Russia can circumvent the sanctions in Venezuela by facilitating the development of a cryptocurrency that necessarily harms them, means that those sanctions don't work, and that allows all the sorts of harms that we think that illegal trade does. That is more people being addicted to drugs. And even though this opposition might say that there are other ways to get around it, we would say that at least on our side, we make it much harder to do that trade, which means that there's likely to be less of it because the cost is greater. At the end of this speech, what do you know? Under opposition, what they have to defend is people buying cryptocurrency because you need to buy it to have that financial transaction. And that necessarily means that it's particularly unstable, that people are likely to suffer, that the vast average consumer and the average person who has crypto is likely to lose out in the future to the mirage of easy money. So proud to propose.
I thank the first opposition speaker for their speech, invite second prop to continue on their case.
Hi, am I visible and audible? Excellent, thank you. There are a couple of things I want to be clear about. First, this debate isn't about whether people own cryptocurrency because they want to do things like retail investment, or they want to own it because they hope the value goes up. This is what the entire case is about. And there are two reasons why this is not what the debate is. First, this debate is explicitly about financial transactions. Contrary to the assertions of opposition one, a financial transaction is not something that they account for, because a financial transaction is exclusively defined as a situation where, for example, you exchange cryptocurrency to buy something else. So, for example, a good or a service like we see in real life. This is not about instances where you use one currency like the USD and you use it to buy crypto and hope it appreciates. So I just want to be clear, if they want to stake their entire case on retail investing, that is just not what this round is about. If it was, the round would have been titled, "This House supports the rise of investing in cryptocurrencies," or something to that effect. Second, here's a structural reason for why this is not what this round is about. either, because they cannot cancel out the fact that people want to invest in cryptocurrency to make money on both sides of the house. They cannot alter a basic fact of human psychology, which is that people are attracted to groups, for example, that promise them you can make a lot of money when crypto goes up. So these two structural reasons mean this is out. Even then, I'll engage with that. Second, I want to take out this last one-liner they had about this debate being about Russia and crime and drug trade. Look, on both sides of the house, Russia and drug dealers will have strong incentives to use cryptocurrency because they will exist. This debate is uniquely about the rise, where a vast majority of other people use cryptocurrency and it becomes even more popular. It's not about whether they exist. So this is just out. Last, I want to take out this hyperbolic language about cryptocurrency recently crashing every day. Do you know why crypto crashed recently? Not because there's anything unique about it, because, surprise, surprise, we are in the middle of an inflation and crazy recession, which is why crypto, if you look at it, is no more volatile and going down no more than the stock market. With that in mind, I'm going to ask two important questions. First, what are the huge benefits we had in contexts where domestic currencies are unreliable? Secondly, on volatility. And here I'll rebut that material anyway, even if it stands, which, by the way, I've already pointed out, it's irrelevant. First, huge benefits in contexts where domestic currencies are unreliable. I want to be clear that this is the most high impact grounds of this debate, because it is in this debate that people are most likely to want to switch from using their domestic currencies towards using more cryptocurrencies. Because in this situation where they trust domestic currencies the least, giving them an incentive to switch. Which is why if you look at it, it's not in the US where most people try and use cryptocurrencies to buy goods. It is in places like Vietnam. It's in places like Zimbabwe, where contrary to their assertion, people do rely on cryptocurrencies. What were the two exclusive benefits we had that they did not clash with? First, we vastly increased credit creation. As we pointed out, the problem with banks in developing countries is that they often lack many savings. At the point where you use cryptocurrency, this is when other users of cryptocurrencies in other countries who often store their money onto these networks, this is when the funds that they store on these networks become accessible to you via blockchain, which is why, for example, a lot of cryptocurrency platforms like Ethereum, for instance, have lending programs with very low interest rates because they want to compete with local banks. So we maximize credit creation and we let people take out loans to do things that are important. Second, we vastly reduced costs. As we pointed out to no response, the currencies of developing countries are incredibly volatile because their governments don't have foreign exchange reserves lying around in large amounts to stabilize these currencies on international markets. Comparatively, we point out that cryptocurrency is far better on this note because on our side of the house, there's going to be a lot of people using cryptocurrency. When there's a lot of liquidity, that is when people are less scared of things like massive sell-off, because there will at least be a core group of people who continue to use it and continue to give it some level of fundamental value because they use it to exchange. That's why under our side of the house, the transaction costs are far lower. This means we drive down the prices of things like imports. I want to take out this one-line assertion they have, which is that the USD doesn't really fluctuate. This is just not true. There are many times when the US wants to increase interest rates because its domestic economy is vastly different from the rest of the world. Take a look, for example, how interest rates right now are much higher than the rest of the world because inflation is just much higher in the US than it is in other countries. So obviously, if they want to say countries are going to rely on the USD in their world where their currencies are bad, we've already pointed out why those are devastating. We need to hear a response. Next, on volatility. Before I go any further, they did not deal with the structural analysis we gave for why the currencies that are often used in financial transactions are vastly different than the currencies that are often used for things like speculation. We give you reasons for why users often don't want to use currencies that they know are very volatile, and we give you examples about why investors, for example, who want to use these currencies will also prefer to use stable coins. They did not rebut any of the specific mechanisms we gave you for why these would also be effective at ensuring stability. Things, for example, like algorithms, things, for example, like backing these currencies up by large amounts of reserves. So that's very important. Therefore, this point of volatility is already taken out by this framing. More than that, I want to deal with the specific things they say. First, they say misinformation is going to drive the value of cryptocurrency. Even if we have to stand for retail investment in crypto in our world, in their world, this group of people will just switch towards buying other types of stocks. Presumably, these are people who are attracted to things that go up and go down in value quite a lot. They will also switch to very risky stocks in their world. So it's unclear what the difference is. Similarly, these risky stocks are also driven by values by misinformation. Their own example of Elon Musk proves this when his misinformation is what has changed the price of Tesla stocks so much. So they cannot repeat this mechanism of misinformation. This rebuttal also cuts into their reason on insider trading, which is why they can't bring it up in their world again either. Therefore, what I've proven thus far is that a vast majority of this analysis on volatility doesn't work. If you're talking about people who want to do retail trading under our side of the house in crypto, they would switch to similarly risky stocks in their world. So this harm cuts both ways. I'm going to move on to my argument about how we lower transaction costs, and I'm going to give you weighing here as well for why comparatively we are far better than their world when it comes to helping the developing world. So why do we lower transaction costs? The premise of this argument is rather simple. Digital transaction costs in the status quo are often driven by things like processing power. And I want to be clear about what I mean. For example, if you want to make a digital payment, you often use, I'll take it in a moment, apps like PayNow, for example, or you want to use Visa, right? And these banks often charge you transaction costs on how much you pay for whenever you switch money. The reason this often occurs is because of the processing power needed to process this transaction. Before I go any further, I'll take the point.
Yeah. How do you get cryptocurrency for financial transactions without investing first to get the coins?
No, of course. We're saying on both sides of the house, people can invest and buy this cryptocurrency. The difference we are saying is that the phenomenon we are describing specifically is not people buying this cryptocurrency. They can do that on both sides. What we're talking about is after they buy this cryptocurrency, whether or not you can use this cryptocurrency to exchange it for something valuable. That's why this debate is not about crypto investing, it's about financial transactions. Back to my argument. Why is it that on outside of the house, transaction costs are significantly lower? There's many structural reasons for this. First, because in their world, they rely uniquely on one platform. This means Visa often runs one program, for example, to try and process many transactions at once. The problem is that running one program on a centralized network overburdens these programs when you have a lot of transactions coming in at once. That's why transaction costs are often very high, and this is obviously very bad because we've told you about things like remittances, where if you want to move money, if you're, for example, a domestic helper based in Saudi Arabia, and you want to transfer money back to your home, the transaction costs are much higher in their world. Uniquely, cryptocurrency solves this problem under our side of the house. The structural reason for this is quite simple. Because in our counterfactual, when it is used for active financial transactions, you have more of an incentive to give crypto rather than any other foreign currency. When you use blockchain, blockchain is not one single platform. It is a decentralized platform, meaning you avoid the problem of overburdening one program. Instead, what you can do is now rely on the spectrum of miners out there, for example, who actively try to process your transaction because you're financially rewarded for processing your transaction. That's why the transaction costs are empirically much lower at the point of cryptocurrency. So this is an exclusive benefit. I last want to end up this argument by doing a bit of important weighing here. Let's say it is true that there's some volatility in cryptocurrency on our side of the house. We say this is better than their side of the house where you have the worst countries in the world with even more volatile currencies, like Turkey, for example, where their currency fluctuates. The structural reason for this is because these crashes don't occur at the same time. So we give people more choice. Let's say in their world, the Turkish currency crashes. People in that country have no choice but to use that currency. In our world, it is unlikely that both of these crashes would occur at the same time unless there is a global recession. This means we at least give people choice. At the point where this currency crashes in our world, at least users have the choice to use their own cryptocurrency assuming it's more stable at that point in time. So we think on developing countries, this is another huge benefit they must respond to. For all of these reasons, I'm very proud to propose.
I thank the second proposition speaker, invite second op to continue on their case.
Just checking that I'm audible. Perfect.
Yep.
Okay. In which case, starting my speech in 3, 2, 1. Panel, don't let Team Singapore lie to you in this debate. They can't run away from our harms about corruption by saying they aren't the majority. That's not how this works. They have to deal with the reality, which is this is a system with no accountability. It's a system where you can't trace transactions. It's a system which allows terrible people to exist. They can't say things like transaction costs are about to get lower because there's only one agency under the status quo, and then say that Bitcoin is the only agency that people are going to use. What Team Singapore does in this debate is rely on their rhetoric and do absolutely no mechanization to prove how they actually get benefit. We're going to be the team in this debate to prove firstly why the cryptocurrencies are disastrous for developing nations, why this is better for normal consumers, and thirdly, a point of substantive about the environmental impacts. But first, just a question in framing about what is a transaction. Because they tell you financial transactions means using crypto to buy things and nothing else. Firstly, we reject this. Buying crypto is a financial transaction. But second, even on their very best case, we still tell you that you need crypto in the first place. They say both sides can have people investing in crypto. But the problem with that is their world is where they need to support a rise, which means they need to support more people investing in crypto, which means they need to deal with all of the harms that we've given you since Toby. Because it is true that if you support something becoming more centralized, you support more people buying it, they have to deal with the reality of this debate. Secondly, they say people are attracted to buying Bitcoin, therefore it's not in the scope because it's human psychology. Like obviously because something is attractive to the human psychology doesn't mean we need to support it. That was a very weird thing to bring up in framing. First question in rebuttal then, how does this crypto impact developing nations? Note how little they do to prove why this actually improves developing nations. All they do is rely on their impacts. Let's firstly talk about volatility. Because Singapore only responds to our comparative by saying the USD and the euro are bad. Two key responses. First, it ignores the structures of reserves. That is, they have huge skill in doing things like making sure their economies continue to exist, point to the US. But second, and this is crucial, they have the incentive to make sure the dollar is good. That is, the Reserve of the United States has huge power and huge influence and huge resources to make sure that every decision they do make means good things for their currency because they have the structural incentive to make sure that currency is doing well. Note how that doesn't exist for any cryptocurrency where there is no centralized body, which means there is no one who, even if they have the best incentives, have the ability to make good decisions. Thirdly, we point to precedent. The fact that the US dollar has been incredibly strong, even through economic recession, and has meant that other countries were able to rely on it. Sure, they may can point to the global financial crisis, but no, that was still comparatively strong then because every global currency fell. Even in the worst times, the US dollar has held. Secondly, and this is crucial, note that there is absolutely no accountability in their world for these cryptocurrencies. That is obviously better in a world where you can trace your currency to a very specific actor, you can have discourse with, that you can talk to about things like trade. Why is crypto far more volatile then? And note this applies to developing nations, but also every stakeholder in this debate. Those are the ones we claim. Firstly, because it's incredibly hard to understand, things can crash quickly. They impact this for us when they say you can sell and buy stock quickly. That's crucial, because if we can prove that individuals do not understand cryptocurrency and that things like in Elon Musk's tweet means they're likely to sell all of their crypto means a disastrous economic crash because everyone just disinvests, that is incredibly important. We would tell you that because crypto is incredibly new, because crypto is incredibly volatile, because crypto has a precedent of being impacted by things like external actors, individuals don't really understand it, so do things like sell and buy quickly. That is economically disastrous for something that they want global economies to rely on. Secondly, it's at the whim of certain individuals. This is responsive to their material about blockchain and why it can't be corrupted. Because firstly, there are literal founders of Bitcoin and literal founders of cryptocurrency. Point to the fact that there are scams where individuals get people to buy their cryptocurrency and then just take all of their money and run away. Like at the point at which people are literally founding things that people are buying, obviously you can have an impact there. But secondly, point to the fact that even if you don't own it, you can just impact it. The fact that Elon Musk tweeting literally results to huge economic deviation in terms of the price of Bitcoin and other blockchains. Why do this is really important? Because they want to stand behind a world where developing countries who are already economically disadvantaged rely on a system which is incredibly volatile, that they can't understand, and is at the whim of powerful individuals who have no incentive to make sure that economy functions. You need to weigh that in this debate because they damn these countries to economic devastation. Secondly, then, on accessibility, and obviously this is relying on improving volatility. Let's take them at their best case, say they do. Firstly, it is unclear why, if you don't have sufficient assets to get a loan, you can get heaps of Bitcoin, right? Like they say that Bitcoin has low interest rates. Obviously, that relies on you being able to get a loan in the first place. Like it is so unclear why banks are likely to give you loans if you don't have capital under the status quo. And now in this world, you're able to access Bitcoin or other types of cryptocurrency and obtain capital that way through loans. Like obviously, if you're poor, that's terrible, but you'll be poor under both sides. But second, note the huge amount of infrastructure that is needed to support things like cryptocurrencies. They say the internet is penetrating everywhere. Obviously, the internet is growing accessibility, but that doesn't mean that these individuals are able to access cryptocurrency and every single business transaction that they relies on it, right? Point to the fact that even Australia, who is quite developed and has technological advantages to other countries, still can't rely on things like Bitcoin because businesses do not have the infrastructure. So even if it is volatile, developing countries can't access technology because it's incredibly expensive. So even if it's not volatile, even if it is very accessible, it's still worse under their side for the fact that you give these countries no autonomy over the currency at all. Before I move on to why this impacts regular individuals, I'm happy to take the point.
When we use the renminbi to buy USD, is that a financial transaction denominated in USD?
No, right? But you missed the second point of framing we give you about why the fact that if more people are needing to use USD to buy things, you need to deal with the harms of more people buying that USD, right? Like in your world, more people rely on Bitcoin and other cryptocurrencies, which means you have to deal with the harms of more people accessing these cryptocurrencies. It's not something that exists in the ether that you can just claim now exists in people's pockets. Obviously, if we can point to these Bitcoins and other cryptocurrencies being incredibly harmful, you need to deal with that. Secondly, how this impacts regular individuals. This is important because it's the majority of this debate. Firstly, they say transaction costs get lower because there's only one agency through things like Visa. Obviously, that's at tension with all of their material about why individuals are just likely to use Bitcoin. They need to pick one. Secondly, they say businesses just use those which are stable. Obviously, that relies on analysis which proves that businesses know what is stable, point to the status quo where Bitcoin is incredibly volatile. That's every piece of material I've given you so far. One point of substantive then about the environmental impacts of cryptocurrency. Observe the mechanisms used to produce and find Bitcoin. That is, Bitcoin, the largest crypto, does not have an infinite supply. So in order to increase supply and keep it affordable, people must mine it. That looks like the construction of gigantic supercomputers working non-stop to find unique ways to access it. These computers are at a constant risk of overheating, meaning they require equally colossal amounts of energy generators to do things like offset the amount of energy they're producing. The harms of that is firstly, that Bitcoin literally has the same energy output as Switzerland. An entire country with millions of people has the same energy output as one singular cryptocurrency. They need to deal with every single cryptocurrency and the mining that occurs for all of them. Note that often these cryptocurrency computers and mining services are placed in incredibly cheap areas, often those which are incredibly cool, points to the fact that there is literally evidence that shows the mining of Bitcoin has led to the melting of glaciers. That's incredibly important. Because firstly, it means that in a world where it's more centralized, this is more likely to occur. There are disastrous human and environmental impacts of this, point to the fact that the climate change is literally meaning oceans are rising. What they stand by is a world where more people do things like exploit huge computer sites, which literally melt literal ice caps. That's incredibly harmful. Note why this is a new path to victory for us, and Singapore has to respond. Because even if they can prove a marginal marginal benefit rather of cryptocurrencies, that is nothing when you counter it to the huge economic devastation and the environmental impact which comes as a result. So incredibly and unbelievably proud to oppose.
I thank the second opposition speaker. Invite third prop to close out constructive speeches for their side of the debate.
Hi, could I check if I'm audible and visible? Right, thank you. Three things I want out of this debate. First, on their argument about retail investing in crypto, I want to note that second speaker's concession. When we POI, when you use the renminbi to buy USD, is that a transaction? They said no. This is literally the equivalent of this, because when you buy Bitcoin, for example, using another currency, that is not a transaction. This debate is about using cryptocurrency to buy a phone, for example, or buy an Apple product, and that's why their case is already irrelevant. But second, let's take this argument as the highest. Let's say it's true that retail investing in crypto is bad. It's unclear why any of these harms are unique to cryptocurrency and not just investing in something that is risky. Like they talk about misinformation and how there's insider trading and elites controlling information. That literally applies to any single stock that exists in the market, where often elites want you to jack up the prices in the short term to make more money. So all of these harms symmetrically apply to vast majority of people, like people who invested in GameStop or AMC, for example, and lost a lot of money and a lot of their life savings. So clearly this is the irrelevant outcome, because the specific psychology of people they want to engage on are the precise same people who would buy into these risky assets in the hope of higher returns. That's why their argument is irrelevant. Secondly, on the environment, and I knew second speaker substantive, I think the problem with this argument is they just haven't been reading much about crypto, because obviously there have been many developments after Bitcoin, like Ethereum, for example, which literally reduces 99% of the energy cost of Bitcoin because they switched to alternative consensus mechanisms that use less energy. So clearly they just haven't been reading about crypto. And the structural reason here is investors have a profit incentive to lower energy costs, because when there's lower energy costs, the transaction becomes cheaper and therefore better for everyone. So that's the structural reason further. Third thing I want out of the debate about crime, which by the way, they also dropped. We already explained why crime is symmetric, because perverse actors will continue to use this on either side of the house. This is about the mainstream adoption of cryptocurrency for buying of transactions in general. With that, I want to talk about two areas of clash. First, on stability, and secondly, on the unique benefits we get. First, on stability, the problem with the analysis here is that we're just incredibly uncomparative, because we said from the beginning of this debate that the alternative for these developing countries is to use their domestic currencies, which are far more unstable comparatively. And we gave you three reasons for this, none of which was responded to. First, on our side, we have more choice, because on our side, we can choose between the domestic currency or the cryptocurrency. On your side, you can only choose the domestic currency, and therefore inherently there's just more risk because you have less choice to switch to a more stable currency. Second structural reason, because we explained that cryptocurrency has a diversified economic profile because it's universally adopted across the world by every single person per their rhetoric. Comparatively, if you rely on your domestic currency, often it's dependent on one single economy. So for instance, the incredibly unstable nature of agriculture industry within your own currency and your own country, for example, influences the value of your domestic currency. So comparatively, within the currencies of developing countries are just far worse. But thirdly, we think that on our side of the house, there's a financial incentive to increase the stability of these cryptocurrencies. And the reason why this is the case is very simple. They just misunderstand what kind of cryptocurrencies we are talking about. Obviously, for those used for transactions, they aren't going to be speculative ones like Dogecoin that Elon Musk bets on, for example. They're going to be more stable ones like Tether, where they're often used and maintained at the current value precisely because of transactions. That's why in these networks, there's an active investor incentive to increase stability, because that is how you get buy-in. That's how you get more people using your currency and therefore your system becoming more successful. So there's an active incentive here for the system developers to ensure that it's stable. Comparatively, we think there's a lack of political will in developing countries to always make their currency the most perfect one, because we explain how often they could be corrupt or often just incredibly inefficient, especially within these developing countries. Therefore, if they want to talk about a central authority, I suspect that this central authority is far worse within the context of these developing countries. 3 reasons they never once responded to. Finally, I want to do with a comparative about the USD. I would first point out, if they really want to support this, that literally means that the economies of developing countries are literally like held hostage by the US, because now the US can just do whatever it wants to its currency to just incredibly damage the local economy of these developing countries. Here's where I want to rebut the analysis about how US is an incentive to make the currency good. Do you know what this looks like? It often looks like making this currency good for themselves, but not other actors who also use the USD. For example, they talk about how the USD has remained strong. This has meant that many developing countries which rely on the USD now saw a decrease in their exports, because the currency they rely on, the USD, has now appreciated significantly, and therefore the exports are now less competitive. So if they want to talk about the US making their currency good, often it looks like they're weaponizing it to hurt developing countries, because guess what? They are not within the US system. They are outside and other parties which the US doesn't really care about. That's why that comparative also fails, especially for developing countries. We think that cryptocurrencies are better because at least it's not centralized on one single authority, and precisely here we flip their logic. It's because they give one authority all the power to control this information and control this currency, which is incredibly damaging in the context of developing countries. So for all of these reasons, even on their own metric of stability, we win. Second area of clash, what are the unique benefits of cryptocurrencies that we think outweighs the idea of stability? And here's where I'm going to explain the 2 unique benefits they never once touched. The first benefit we gave you was that we increase access to better loans. And the reason for this is quite simple. First, you increase the supply of loans available because you can now tap on these fintech services. And secondly, you decrease interest rates on these loans because there's more competition, because different fintech providers are now offering you different loans, and therefore there's increased competition to lower interest rates. The only response is, but if you have no capital, how do you get loans in the status quo? Why would banks lend you? Exactly, that is our point. Traditional banks won't lend you this because you have no capital, whereas in the context of cryptocurrency, which are often used or built on blockchain networks, which provide other things like financial services, that is when these different financial service providers can offer you these loans across the world, especially given that these providers have a far greater risk appetite, because they don't only operate within the developing country, they operate across the world where they have access to a lot of capital internationally, and therefore have a greater risk appetite to lend you this money. That's why we are uniquely better for these people. Then they said, but developing nations can't access cryptocurrency. Why? Because it's expensive infrastructure. I'm sorry, for the vast majority of developing countries, they do have infrastructure like Wi-Fi networks to access these things. Like, honestly, they just seem to have this caricature of Africa as just a wasteland with no infrastructure. We think that internet penetration rates are incredibly high, and many people are using this as a form of cryptocurrency, like we see in Vietnam, like we saw in Thailand, where they switch to cryptocurrency to mitigate against the volatility of their own currency and for their own transactions. So clearly, we get this on our side of the house. Before I move on, I'll take that PY.
At your best case, developing countries are able to use cryptocurrencies, but these countries are likely to use big ones on massive scales. Why then aren't they inept to things like huge volatility from international markets?
Wait. If the cryptocurrency is a big one on international scale, this means that more people are trading it at one time. This means higher liquidity because you can buy and sell this currency easily. That therefore means there's more stability because the market can reflect the actual supply and demand in these cryptocurrencies because you get more liquidity. So that reason proves our case, and it proves that on our side of the house, we get more stability. Back to my argument. So first, I've already explained why we get the unique benefit of accessing better loans. But not just that, they didn't respond to my second speaker's argument on how this lowers transaction costs, because we explained to you that one centralized program is slower than countless miners across the world validating transactions. And that's why, because we process transactions faster, that means lower costs, and therefore making it cheaper to access goods or cheaper to buy services internationally, for example. What are the impact of these 2 unique arguments, and why do they outweigh their claims? Let's take them at their best. Let's say it's true cryptocurrency is more volatile. volatile. We think that having a volatile currency is better because at least it means you can access loans. At least it means you can buy goods at a lower cost because now the currency network takes up less of that transaction every time you use it because transaction costs are structurally lower when it comes to cryptocurrencies. So even if they're more volatile, we're willing to trade it off with all of these massive benefits of accessing loans to buy a house or start a business, for example, in the developing world, or for instance, just purchasing groceries at 5% less cost for people who already live paycheck to paycheck. At the end of the day, I'm going to make a prediction. They're going to shift to some new material in the next speaker because clearly they haven't responded to all of our structural analysis. So when they do so, remember 3 things. First, we prove on the comparative we are better for stability in the context of developing countries. Secondly, we allow them to access better loans. And thirdly, we lower transaction costs for the most vulnerable. For all of these reasons, we need stability, not volatility. I've never been prouder to propose.
I thank the third proposition speaker, invite third op to close out constructive speeches for this debate.
Am I audible? Perfect. The problem with Side Singapore's case in this debate is a problem of tensions, because simultaneously they want you to believe that the only one we're talking about is Bitcoin, but then the only good examples of stable currencies are Tether, which very few people have actually heard of. Then they want you to believe that these are only used in developing countries, but also are incredibly unlikely to be able to place set this in a general sense. We think we win this debate, not only because we make currency more stable, but even if you don't buy that, we have 2 separate paths to victory, which are the environment, which are how this plays out with like dark money, which means we win. I'm going to ask 4 questions in this speech. I'm first going to start off with what scenarios are we actually talking about and why, therefore, we are put ahead in terms of characterization. Then I'm going to deal with the only place where Singapore is willing to engage in this debate, which is about the stability of cryptocurrency versus alternatives. Then I'm going to bring up the point of the environment because it is in, and fourthly, your point about regulation, about how that stands. On the first question of what scenarios, 3 things to note. First of all, you have to believe that more people being able to complete transactions in Bitcoin necessitates more people investing in Bitcoin because you need access to that in the first place. That literally makes no sense on the behalf of Side Singapore. And that is very important in the context of this debate because you are dealing with the average person now being placed in a pool of other people who are trying to invest this, who are trying to make the most amount of money in a quick term as possible. And note that these means that these people are most susceptible because, okay, Elon Musk can hold onto his Bitcoin for 10 years while it evens out with kind of market fluctuations. The average person can't. At the point in which those are incredibly vulnerable, we would say we are ahead. Second of all, this is not just about Bitcoin. Noting that they then talk about it themselves when they talk about decentralized, like having a bunch of different ones. We're not relying on single systems. That is a tension. That either means, first of all, you are just relying on Bitcoin, which means we are talking about the environment. And secondly, even if you believe it just absolutely isn't about Bitcoin, which like undercuts every single mech in their case, it is likely to do things like absolutely harm the people in the developing countries they want to talk about because the average person cannot distinguish between a lot of these ones in the first place. The third note in kind of what scenarios we are talking about is this just about developing countries? No, they cannot set this debate. They tell you that the only people who buy Bitcoin are in the developing world. That just doesn't survive a reality check. Like so many finance bros in the US, the average like middle class American is probably more likely to do this at the point in which it has become quite normalized in a lot of these places. Noting then at the end of that, This debate takes place on far larger grounds than Singapore is ever able to deal with. And that is why we are already ahead. But to take them at their best and to talk about crypto only in the context of it being uniquely stable, we give you a couple of reasons why that is not the case. We tell you that they are uniquely poor, like people are uniquely poor at making decisions about crypto. Let's just envisage, like try and talk about how other things like having shares like is also very vulnerable, but like they tie Bitcoin to gold. Like why wouldn't you just buy the share in gold rather than buying the share in Bitcoin, which then has shares in gold? Because obviously you are relying on assets in a lot of these cases. We would also tell you, because there is literally nothing that decides the value of Bitcoin. It's not how well a business is doing. It's not any kind of interaction in that sense. That does not make any sense to the average person, and rightly so. That means people are far more likely to make poor choices about how they invest, because the opposition can talk about Tether, but if people like literally just like massively pull out or put a lot of money in at the whims of what Elon Musk tweets on Twitter, that is likely to be a way in which they make poor decisions. Secondly, we tell you about things like insider trading because of no regulation. There's very limited response from inside Singapore. Then we tell you that the market fluctuates, the demand fluctuates more, and that is likely to be bad. We get two main pushes that we get from side proposition. The first they tell you is that liquidity lowers instability. First of all, noting that this does exist under a world in which they have a tension in the decentralization neck, because either liquidity is not that like massively affected because everybody's buying onto one system, they're buying onto a bunch of different ones that are existing at the moment. That is unlikely to have a meaningful effect. Second of all, liquidity does not necessarily equal stability if you can easily just massively pull your money out of Bitcoin. When we say that a lot of the people who invest a lot of money tend to be elites that are playing out in this debate, at the point in which they take their money out of Bitcoin, that massively makes life harder for every single other person who relies on that to complete a transaction. That is incredibly damning. The second push is to say the businesses will make it stable, so they try and buy in. We would say, how would that work, considering this will only work on such a small scale? And secondly, that is never going to be as effective as a government, because you're essentially copying that mechanism as like way worse. It's unclear why like Apple is a better actor than the US, considering there's at least a degree of checks on that system. And secondly, that is a concession that you need this backing in the first place to make it stable. That means at the point in which there will always be like a reserve bank, there is unclear why there'll be one for Bitcoin. That just falls out of the debate. We tell you then that this is a trade-off between having elites run this system, elites who are able to pull money out, able to tweet on Twitter and impact the way that people spend their money, the way that people interact with the economy. That is quite damning. The next push they tell you is to say that the US and the euro are quite bad. We tell you this is wrong for two reasons. First of all, we tell you that not only they have the skill, but they do have the incentive to make these incredibly stable, noting many countries tie their value of their currency to the US. They tell you, for example, like also that the Bitcoin is attached to gold. Like that's nothing compared to what like the Federal Reserve exercises in terms of control of gold. That is like quite unfair for them to push. We would say there are many other investments that are also quite important that people could take out with this money that they instead use on Bitcoin. We tell you that buying things like shares is far more stable, because at the point at which you're investing in a business can sell off a bunch of stuff that are holding them back. That means that they can like limit the impact on a person. That's not the case in Bitcoin. You can buy into funds, you can invest directly in gold. These are all things that are likely good. At the end of that, you know the crypto is likely very, very unstable, because it's not tied to anything that actually exists. It's tied to how much people who have a lot of money are willing to give it the time of day. That doesn't make any sense. They actually like make people's lives worse. Now, moving on to a very, very important point of this debate, which is the environment. At the point in which you believe logically that in order to complete a transaction with Bitcoin, you need to buy Bitcoin, we think that you're far more likely to do things like have money in these supercomputers. Before I elaborate on that, I'll take a point.
If specific cryptocurrency was so volatile, why would businesses be willing to accept payment in it?
Okay, we think that a reason a lot of these invest in the first place is because they get like an advertisement of having this novel thing of being able to accept Bitcoin in the first place. We would say that at the point in which like a lot more people use like the USD than they do Bitcoin, that's also quite an important way that mech doesn't even make sense. So the environment is devastated under a world in which Bitcoin, assuming that's the one they go off, is likely to exist. Supercomputers literally generating enough energy to melt glaciers, the same amount of energy output as Switzerland. Don't believe that any side has a meaningful difference upon stability. Even if Singapore is slightly ahead of that clash, we still win just because of the astronomical effect effects this has on terms of climate change. Secondly, another distinct path to victory is a way in which we make it incredibly far easier for illegal uses of Bitcoin to prevail, noting that it's especially bad. They try and wash this by saying that they're likely to do it anyway, noting that you stand for the vast normalization of it. You have to assume that the cases in which that happens is likely to increase in a meaningful way because it is so anonymous, because it cannot be tracked. That is especially bad. At the end of this speech, what do you know? You know that you have crypto, you must buy crypto and hence invest in crypto, a basic premise which this debate lies. You know that the only side that can guarantee stability is a side that actually has it connected to actual institutions that have a precedent in the status quo, not relying on this. Perhaps some Bitcoin companies will work better in the future. You know the only side that exacerbates climate change is side Singapore, the only side that exacerbates the drug smuggling and the use of dark money in crypto. So incredibly proud to oppose.
I thank the third opposition speaker, invite the op reply to close out speeches for their side.
Can I confirm that I audible? Cool. There are three questions in this reply. First, I'm going to talk about what this debate is actually about. Secondly, which currency is more likely to be stable. And finally, I'm going to talk about the insufficiently responded material that this opposition doesn't actually talk about. There are two strategic notes to talk about here. First is that opposition tries to say investment is not part of this debate. What that ignores is that in financial transactions, you need to increase the demand for crypto because more people need to buy it. And so at the point where more people are using it, clearly more people are holding it. That is the necessary harm, the reasons that we gave you down the bench. The second thing to talk about in this debate is that they cannot place set this debate to the very few countries they want to talk about. You have to talk about every other country that uses crypto, and those are actually the countries which often use the most crypto, and therefore the most susceptible to the harm on pure scale, on pure numbers. That is something they have to deal with, they have not. So the second question I'm then going to talk about, which currency is more likely to be stable. And this is important because all of the opposition's material is actually contingent on that currency being stable. Because if it is not, then spending money on Luna to buy food does not work because it devalues so fast that at the point where you're trying to spend it, you've simply lost money, which means they cannot claim any of their benefits here. We explained from first that first, crypto has no inherent value, that Elon Musk is in fact the one that controls it. And whilst they say that there is no management of crypto, in fact, the people who are managing it are the ones who have the most money, the ones who have the most stake in crypto and the most likely to spread misinformation that actually leads to its own downfall. But secondly, because no central bank can control the currency, it means that it's necessarily more volatile than, for example, the US dollar. And whilst they may say the US dollar devalues in some cases where there's a global crisis, we point to the fact that currencies like Luna, like Bitcoin, are projected to go high, but in fact go to almost zero in many cases and are incredibly harmful for the reasons we give. What do they say? Their first line of attack is to say that firms will be doing backing, but clearly that's uncomparative. The reasons we give you down the bench, which is that even though firms might have some level of money, that is not the same as being able to control the currency, which we explained from first. The second line of attack is that businesses only choose stable currencies. But again, that ignores the nuances, which we give at first and point out again at second, which is to say that no one knows how stable it will be. Businesses don't know, which means that it's incredibly hard for this opposition to walk the line of businesses know which ones are stable, when in fact we have pointed out the structural reasons why it is so volatile. The second thing to point out here is that this again ignores our material why buying some level of crypto often leads to the greatest spread overall. So even if they can point to a few stable currencies, we point out that there are many more which are not. And as that spreads, if this opposition supports the rise, they must defend those in the future too. Their final line of attack is to say that other investments are also banned. Again, this ignores the unique reasons why this is likely to be worse on their side, why crypto is more volatile, because people don't know much about it, because they're subject to panic in a different way than they are to currencies when they don't have that same familiarity. All of that is to say that what this opposition has to deal with in this debate is crypto being unstable. That means that they cannot claim the vast bulk of their benefits, which are contingent on it not being volatile. Because if it is volatile, you cannot buy the food they want to talk about with it, because it devalues so fast that at the point where you're trying to do that, you've actually just wasted your money. But second, the average person in every other country in this debate, this opposition does not want to talk about, suffers. They lose millions of dollars over time. They're the ones who necessarily lose many of their life savings and are unable to pay the rent the next week. The final thing that I'm going to talk about in this debate is all the unresponded material which we give you. We talk about the environment, we talk about things like dark money. The only responses we ever get are at best mitigation. They say perhaps it's getting better with Ethereum 2.0. We would point out the fact that that is mitigation at best, takes lots of time. If they want to talk about the rise, they have to obviously defend other things than Ethereum. For example, the biggest thing, Bitcoin, which is destroying our planet. But the second thing that we talk to you about is dark money. And they say that it doesn't matter, but we think it does, because for the people who are suffering from illegal drug trade around the world, the way that China circumvents the trade sanctions in Venezuela, those people do matter. We make it harder to do that. Their lack of response here is not sufficient for them to get them over the line. If anything else, if you think that other things are what, you must vote our side for the reason that we are the ones that actually prevent those harms and from that occurring. At the end of this debate, crypto is structurally volatile. This opposition cannot run away from their burden, and you must vote side opposition.
I thank the opposition reply, and last but not least, invite the prop reply to close out this debate.
Hi, can I be seen and heard? Great, thank you. And the House prediction was right. When they realized they were losing, they launched a flurry of late accusations in op block, most of which were groundless. First, they accused us of a pseudo-contradiction. They said we must only use Bitcoin in our world or all of our benefits of liquidity are gone. That's not true. We gave you structural analysis as to why cryptocurrencies are diversifying and why businesses have the active incentive to adopt the cryptocurrencies that are the most stable for trade. Second, they accused us of play setting the round, a rather curious strategic choice in Op 3 because we gave you structural reasons in first prop why this is the majority of the debate, because people turn to crypto precisely because domestic currencies are unstable. Contextualization is not the same as play setting. Let's look at the two worlds in this debate. From the get-go, opposition's world was built on a misunderstanding of the motion. Their first argument was entirely about retail investment. Let's look at the motion. It says financial transactions. Usually, when we say a financial transaction in the USD, we mean that you are using the USD to buy an Apple or a phone. We don't mean using the renminbi to buy USD for foreign investment because it's not denominated in the USD. Hence, investment in crypto was just not part of the round. When they realized their case was entirely tangential, their flimsy justification to save it was that you need to buy and hold volatile Bitcoin before you can use Bitcoin. Unfortunately, we explained in first prop that people don't use volatile crypto like Bitcoin to transact. This is because businesses would only want to opt into using it if the crypto has mechanisms to guarantee stability. They did not explain why these mechanisms, like the use of algorithms, like stablecoins being backed up by tangible assets, did not work to maintain stability. They asserted that businesses don't know if a cryptocurrency is volatile, missing out on how businesses obviously check the internet for which cryptocurrencies are volatile. This took out their hyperbolic claims of crypto crashing every day and wiping out life savings. Additionally, even if crypto was volatile to some extent, we gave you 3 structural reasons right from first why the developing countries' currencies are more volatile. Yet at least people have a choice on our side, because if Turkey's currency crashes in both worlds, at least people can transact in a cryptocurrency that's more stable. Additionally, we gave strong incentives for crypto firms to increase stability to incentivize businesses to accept payment in their currency. Thus, their case was just a massive red herring. Maybe that's why they abandoned that first argument about retail investing as the debate went along. But even if their case was relevant, their world was built on a naive understanding of financial reality. They said alternatives were stable because the US Fed has like good incentives. No, the US Fed has incentives to make the USD good for the US, not other countries. That's why the example of Zimbabwe, where cotton exports were slashed, was unresponded to by their side. They said people can't access cryptocurrencies in developing nations because there's no internet. That's genuinely offensive. Internet penetration is near 80% across Africa, and crypto is used in Vietnam and much of Southeast Asia. In third op, they return to their argument about how Bitcoin is harmful for the environment, ignoring not only the fact that Bitcoin is not mainly used for financial transactions, but the past decade of crypto development like Ethereum, which have slashed emissions by 99%. Our world was grounded in a far more nuanced understanding of reality. We recognize that developing nations have a dilemma. Their currencies are incredibly volatile because they hold very little foreign exchange reserves, yet adopting a foreign nation's currency enslaves them to their monetary policy, which hurts their export competitiveness, their imports, and their attractiveness to foreign investment. Unlike the assertive op team that uses intuition pumps, we gave you structural reasons why cryptocurrencies are likely to be stable, high liquidity, credit, how they're decentralized and not controlled by one single actor. Even on their best case, we had a guaranteed benefit of lower transaction costs and improved access to loans, which outweighs their only harm of volatility because we guaranteed a direct improvement in quality of life. We need stability, not volatility. Very proud to stand on proposition.
Okay, I thank everyone for that excellent debate. So I believe a breakout room should be open in just a moment for the judges to enter into. And after we've thoroughly discussed